Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on Amazon, Google, and Netflix. Big week for all these names. Congrats to the bulls, but we definitely saw some profit taking today on reaction to those earnings. So Amazon with a huge gap up, 950 psychological resistance. We pulled back just under that level, and we saw a ton of profit taking. This was essentially a gap and trap scenario where the high of the day was the open and the bears controlled the entirety of the day, closing at the low. We will test the upper Bollinger Band as support on Monday. The gap will fill at 921.86, and once that gap does fill, I do believe we will see the bulls reestablish a new level of support and try to show back up. So what were the clues for the bears? And we had some nice bear plays, some members making some nice trades, playing puts and making some good gains there. And what were the clues? And it's always the 5-minute time frame for me, and it is the 20-period moving average support. On any gap up or gap down open, the 20-period moving average is my gauge of strength. And if that level stays as support on a gap up, the bulls have strength. If it is resistance and we lose that level on a gap up, then we start seeing profit taking and the gap filled to the downside. Same scenario on a gap down. As long as the 20-period 5-minute moving average is resistance, the bears stay in control. So here on Amazon, heading into the open, we saw the bulls try and gain that 20-period 5-minute right when the bell rang. But then first thing, look at all that bear volume, just an all-out dump, and you can say it is all bear volume because it's pretty much a red Marubozu candlestick where the high was the open and the low was the close, all bear volume. We then saw a bounce attempt on declining bull volume, rejecting from the 20-period 5-minute moving average resistance, this green line, and then dumping to a new low of the day on increasing bear volume. So in the first half an hour of trading, we had every single textbook example of bearish control that you can possibly see on a gap up scenario. Declining bull volume, increasing bear volume, new low of the day, rejection from the 20-period 5-minute moving average resistance. And from there, look at how long this 20-period 5-minute moving average stayed resistance. If you got in on the first rejection, that was at about 947.77, and then 2 hours later, we're down here $13 lower. We closed above the 20-period 5-minute moving average one time during the day, and that is all. And that shows how very significantly strong those bears were. Just lower highs and lower lows all day, and what stands out? Look at the volume. Increasing bear volume on a new leg to the downside. And then we had increasing bear volume on another leg to the downside, and increasing. You just see every little period of red bars is increasing. It's textbook bearish action. Bears in absolute full control of Amazon. Hourly time frame at this point, RSI has cooled off substantially, and now the bulls must form a higher low. I'm looking at 915 as the must-hold level to form this higher low. That was consolidation at the end of the day Thursday, and I do believe the bulls will hold that level and continue to be strong on the daily time frame. It was just a day to lock in those profits and to play Amazon bearish for a day trade. So looking at the weekly time frame, rejecting from the upper Bollinger Band. Look at the all-time high we had last time. Very similar candlestick. Bearish reversal, inverted hammer, another bearish reversal, inverted hammer here. We didn't see much pullback on that hammer. We saw a bull flag, actually, that led to continuation in a new all-time high. So we're not going to be assuming that we're going to see some significant downside here unless we were to break that 915 level. Google on the daily time frame, nice earnings, gap up as well. We had a bit of a more tricky scenario where we were seeing the 20-period moving average. It wasn't as clear, and it's obviously not always as clear, and it's not always an accurate signal. It's just more often than not, this will put the odds in your favor. So the bulls were really going all over the 20-period moving average, and you can see in the first half hour, we lost it, we regained it, and then we lost it again. So as soon as I see that happen, as soon as I see the back and forth action, then I know that the 20-period 5-minute moving average is no longer a good signal. You want to see it reject very clearly or hold very clearly, like we saw on Amazon. And Facebook was another example today. We had a gap up open. First 3 candlesticks today held the 20-period 5-minute moving average, proving the bulls were strong on the gap up. We weren't going to see gap build to the downside, and then we headed up to new all-time highs. So use that 20-period 5-minute moving average on gaps. See if you like it. Watch how it plays out. And for me personally, I would use it. I use it every time. So Google closing near the low of the day. The bears have some momentum. If we break 923.22, the low of the day on Monday, we're going to look to test this upper Bollinger Band as support. We've been holding this upper Bollinger Band for 4 days in a row, showing the bull strength, and it's going to ascend very rapidly. So we can assume it's almost going to jump $10 per day. So we have to update that at the open on Monday, see what level that's at, because I do believe we are going to test that very shortly. Big breakout on the weekly above the upper Bollinger Band. So the bulls are in full control. Blue sky breakout. Nothing to worry about long term for these bulls. It was a great week. Netflix, new all-time high as well, but we have to be a little weary because we have a double top. We have the all-time high at 153.52, and we pulled back by 3 pennies. That's a double top, and now we have an inside bar to watch. The bulls did buy the dip at the low of that inside bar, and on Monday, if we get a bull break of 152.97, we're going to look for an all-time high. If we get a bear break of 150.94, we're going to look for further consolidation back down towards the 149 area. So this inside bar is the range to be watching. Double top is the clear resistance. Weekly time frame extremely strong after some sideways trading, holding some exponential supports, big time follow through to the upside. A beautiful chart for the long-term bulls. All of these charts favor the long-term bulls, obviously, because all of them are hitting all-time highs. SPY is on the verge, the S&P 500 on the verge of all-time highs. So ideal scenarios to be bulls in and nothing to worry about long-term. So anticipating some further consolidation on Amazon and Google because of how we closed, but also going to be a nice bull entry in Amazon, in my opinion, in the near-term future. The first target we're looking at is this gap fill, 921.86. Hope you have a great weekend, and we'll see you soon.